Thank you so much, Michelle and panelists. It's super interesting to see how resilience has actually changed its face over the past 10 years, just in the sense that we also find that the tenants, the corporates, they are putting pressure on the building owners and the landlords and developers to actually have their resilience standards on point. And it's great to see that pressure come on from the tenant side of things as well. I would now like to call on Wayne Godwin, the CEO of JLL Africa, who's going to be presenting Africa's Youth Dividend and Real Estate, exploring demographics, cultural trends, and shaping future urban development.
Good. So the panel earlier asked a question about what keeps them awake at night, and Bill Gates was asked this question a couple of years back, and the answer might surprise you. Population growth in Africa was his response. My name's Wayne Godwin. I'm the CEO for JLL in Africa, and this is a topic we give a lot of thought, and yes, sometimes it is at 3 a.m., and I'm delighted to be here today to be able to share some of these 3 a.m. thoughts with you and take you on a bit of a journey, as it is a longer time frame, often as is the case when we talk about Africa's demographic story. And it's, of course, important to realize that real estate itself and the world is going to fundamentally change. So whilst the topic is focused on demographics, we have to realize in parallel, real estate is constantly changing. Here we've mapped out, a number of sort of change agents to real estate. I'm not going to take you through this. The point is that there is a lot of change occurring in real estate. So let's get into the population story. Many of you know the headline stats, right? So today, 18% of the world's population live in Africa. That will increase to 25% by 2050. That will increase to 32% by 2075. But that's actually the least important stat you're going to see today, right? Let's look at the working age population. That's the important bit, right? Today, only 10% of the world's working age population live in Africa. That too will increase to 25%, 1 in 4, right? Quarter of the room. That will then increase to 33% by 2075. So, ladies and gentlemen, you can see this significant rise in non-dependent versus dependent population. So Africa, over the next 50 years, will add 1.2 billion workers to its population, and that dependency rate comes down from 75% down to 50%. Now, you may say 50% still sounds quite high, right? So let's look what's happening in the rest of the world. All dependency rates going up. Africa, the only continent, dependency rates coming down. That is a demographic dividend. When you talk about demographic dividend, that's what we're referring to. So the rest of the world will lose 1.4 billion workers from their working age people from their population. Now, of course, you can debate what does working age mean in 2050, 2075, but this is thematic at best, right? So let's talk about those net working age people that have been added to the population. What do we know about them? Will they be more educated? And the answer is yes. The projections of those 1.2 billion workers added to the continent, 70% will have at least an upper secondary or post-secondary education, right? So that's key, and that's an important second trend. Not high population, it's high working age population and higher education. What else do we know about them? Where will they live? The answer is undoubtedly cities, right? Africa's cities are the center of growth. So you can see Africa's 100 largest cities, how those are growing relative to the rest of Africa. And what cities in Africa look like from a population compared to other regions. But is it only population? That population doesn't necessarily mean all that much. From a growth in GDP and employment, sub-Saharan African cities will outpace all other cities in other regions, right? That is quite clear. However, unfortunately, because of that high population growth, not necessarily making much in the way of gains on a per capita basis. You can see the graph on the left, my left. So that, of course, means cities are going to be under strain. There isn't significant, and there needs to be massive urban infrastructure investment. Today, governments across Africa are only spending roughly 2.5% of their GDP on urban infrastructure, which is far below emerging market peers at around 4%. So that needs to be increased, but roughly 40% of our urban infrastructure investment actually comes from governments across Africa. The big portion comes from ICA members, that's the likes of multilateral, DFIs, etc., other countries, the private sector. So that still will be the case. But remember the graph around the dependency rates going up. The rest of the world have their own larger population to look after. So the funding for this a lot more will have to come from African governments and the private sector. So, ladies and gentlemen, you are sitting on a continent that will likely add more building stock than Europe and North America combined by 2050. What does that mean? So, of the buildings that will exist in 2050, 70 to 80% of them don't exist today, whereas that is inverted in the rest of the world. But before we get too excited, right, let's make some clarifications. Only about 0.2% of our current building stock is institutional grade. What does that mean? It's the big, shiny stuff that listed funds, pension funds, etc., want to kind of invest into. So we have probably about 0.5% by best estimates of the global supply of that type of real estate. So it can triple, right, quite comfortably, and it would still probably be less than 5% of the amount of that type of stock brought on in, say, Europe and North America. So we shouldn't conflate the opportunity from a percentage base when we talk about 25% of the world's population. That does not mean, but it's certainly a big opportunity when we look at how not a population is growing, but changing. So where will that building stock be? Well, it's definitely going to follow similar patterns to the population growth across the middle of the continent. But once again, that institutional grade stock will still be anchored in North Africa and Southern Africa because of the denominator effect and the large base it will come off. In terms of scaling through the rest of the continent, East Africa, hubs of Nairobi, Tanzania, Ethiopia, etc., probably have a more consistent pathway to growth. But with a medium reform case, West African hubs of Nigeria, Ghana, Cote d'Ivoire should actually outpace those East African peers by scale. Smaller, mature economies of Rwanda, Mauritius, Botswana will continue to mature, but will unlikely see the same scale of growth in institutional grade stock. Institutional grade stock in Central Africa, Angola, Mozambique, etc., will be strong, but more niche by asset class. Right, talking about asset classes, let's just touch on how this could sort of shape certain asset classes. Retail. Middle class consumption will triple, right? So, of course, e-commerce is going to disrupt things, right? But logistical challenge in cities will still anchor the need for convenience, mid-scale malls, neighborhood, etc. And GLAs could still triple over this period. Offices, right? Africa will have the largest working age population. But importantly, our economies are shifting to more service-focused, productivity-high sectors, tertiary sector versus primary sector. That will underpin demand in the office sector, right? Multinationals will see increased demand for quality green certified space, without question, but it will definitely they will double down in hubs across the region, and that part will not sort of spread to every country in Africa. Logistics, obviously urbanization and the need for efficient supply chains really make this probably the most scalable institutional asset class over that period. And we could see very strong growth here. Hospitality, certainly the improvement of flow of goods across the continent and connectivity. So the African Continental Free Trade Agreement. Think if goods are moving freely, people move freely and they stay in hotels. So the mid-scale sector certainly still poised for a lot of growth. Data centers, Africa has the fastest growing internet penetration and is significantly undersupplied from a data center. And Ash has a pretty good thesis from a global perspective on sustainability for this asset class. Student housing, of course, you think that the median age person today in Africa is 18 years old. So they haven't even gone to university yet. So that's important to sort of really think about. So tertiary enrollment could double by 2040. And this would probably be one of the early sort of demographic winners because it will likely be quite an institutionalized asset class supported by public sector and actually more diversified by country than maybe what some of the other asset classes will be, albeit still very urban focused. So I think the fortune could be at the bottom of the pyramid, right? But we also need to realize scale and returns are definitely dislocated for a number of sort of reasons, right? So the scale at the bottom, affordable housing, entry-level multifamily, certainly will be where we see significant demand coming from these demographic trends. Followed by productivity and infrastructure-linked assets, think industrial logistics, data centers, etc. Followed by consumption, urban experience, the likes of retail and hospitality. Then your office sector, and right sort of towards the top, luxury and later living, following that sort of demographic theme. But sectors closer to the top, absolutely some fantastic returns, but likely will be sort of more geographically concentrated. So to close, what does this all mean? I think the message today is to not get caught up in the hype, but to ignore the role that demographics will play for shaping real estate in Africa. I think historically, demographers kind of fell into two camps, right? One saying this is all doom and gloom, slums, how can governments keep up with the pace of infrastructure and social sort of investment, or those that sort of saw this as the golden ticket for Africa out. Increasingly, the consensus is not this will be either or neither, this will be both at the same time. The two things will happen concurrently. So, despite unprecedented growth that's coming, this is unlikely to become a global center for institutional grade real estate. We have to accept that. But still significantly strong growth fundamentals. And we've been talking about this demographic for a long time because it has been coming for a long time. We track fertility rates, etc., and we know it's coming. But that median age is 18. So they haven't even started working or occupying, buying anything yet. Okay? Cities are going to take strain. The global north will have less funding to support. Private sector needs to play a role. Sub-institutional grade will be dominated by a lot of private capital and wider distribution across the continent. We do think growth in the institutionalized sector will be stronger, but far more geographically concentrated. And investors really that are able to disrupt that bottom of the pyramid and institutionalize that are going to be the real winners over this next 50 years, unless a comet comes and ends it all for us. But no, thank you very much, I guess, for going on this journey. It's important to sort of just think about this thematically and peel away the layers of just saying 1 in 4 people will live in Africa by 2050. It sounds impressive, but we need to start looking closer and understand what does that actually mean. Who are those? Who is that person? And what do they represent? And how do they occupy real estate? So thank you very much.